Investing 101 is your starting point to grasp the fundamental principles of investing. But here's the critical question to consider. Do you know what makes your money grow? And how can you get started? In this easy-to-follow guide, we'll break down the basics so you can confidently navigate the world of investments. So, are you ready to unlock the secrets of growing your money through smart investing? In today's video, we're taking a journey into the intriguing world of investing. No matter if you're a seasoned pro or just beginning your financial adventure, getting a grasp on the fundamentals of investing is vital. Think of it as planting the seeds for your future financial garden. And the more you understand, the greater your chances of reaping a plentiful harvest. So, if you're ready to embark on this path to financial growth, you're setting yourself up for a more secure and confident future. What is investing? So, what exactly is investing? Investing is like planting seeds of money with the hope that they will grow into a bigger harvest over time. It's a way to make your money work for you. Instead of keeping your cash idle, you use it to buy things that could increase in value. It's a bit like purchasing a piece of a company, called a stock, lending your money to others, or even acquiring property like a house. The goal is to grow your wealth. It's a bit like nurturing a garden and watching it flourish as your investments develop, bringing you closer to your financial goals. In the beginning, it might seem a little complex, but at its heart, investing is a vital tool for securing your financial future and making your dreams come true. Why investing is important? You might be wondering why investing is important. Here's the deal. Saving money is a good beginning, but it may not be sufficient in the long run. As time passes, something called inflation can slowly reduce the value of your savings. Investing, on the other hand, is like a tool to not only keep up with inflation, but also have the potential to outperform it, helping your wealth to grow more effectively. It's a bit like having your money grow faster, almost like a magical plant that flourishes over time. So while it might sound a bit complicated, investing is a way to ensure that your money doesn't lose its value and instead works to make your financial future brighter. Key investment options. When it comes to investing, there are different paths you can take. The most usual ones are like different tools in your financial toolbox: stocks, bonds, real estate, and mutual funds. Each of these tools comes with its own level of risk and potential for rewards. It's a bit like deciding which seeds to plant in your garden, knowing that each plant will grow differently. Here's the catch. You don't want to put all your money into just one type of investment. It's like not putting all your eggs in one basket. Instead, it's wise to spread your money across different investments, a strategy known as diversification. This helps you manage risk effectively. It's a bit like having a mix of plants in your garden. If one doesn't do well, the others can still thrive. Stocks. Stocks are like owning a piece of a company. When you purchase a stock, it's a bit like becoming a part owner of that company, and you're called a shareholder. They can be pretty exciting because they have the potential to grow a lot, almost like watching a small plant turn into a big tree. However, there's a catch. They can also be quite risky. Their value can go up and down very quickly, which is a bit like riding a roller coaster. So while stocks have the potential for big rewards, it's important to hold on tight and be prepared for the ups and downs that come with them. It's like having an adventurous ride in the world of finance. Bonds. Bonds, on the other hand, are essentially loans you provide to companies or governments. It's like you becoming the lender, and they are the borrowers. In return for lending your money, they agree to pay you periodic interest payments, kind of like saying thank you for the loan. And they promise to give you back the bond's face value when it matures, which is like returning the borrowed amount. Bonds are generally less risky than stocks, so they're like a smoother ride on the financial roller coaster. But in return, they offer lower potential returns. It's a bit like choosing a calm river cruise over an exciting adventure. Less thrill, but more stability. Real estate. Real estate involves investing in properties, like houses or apartments. It's like becoming a property owner, and that can bring you rental income when people rent these spaces from you. Plus, over time, the value of the property might go up, which is a bit like seeing your garden flourish. But it's not all smooth sailing. Real estate investments can be more hands-on, sort of like taking care of a garden that needs attention. You might need to deal with property management, which involves things like maintenance, finding tenants, and handling their needs. Mutual funds. Mutual funds pool money from multiple investors to buy a diversified portfolio of stocks, bonds, or other securities. It's like having a community savings pot where everyone chips in, and together, you invest in a mix of things. These funds work a bit like investment baskets, containing a variety of assets. This diversity helps spread out the risk, so if one investment isn't doing well, the others can balance it out, much like having different foods on your plate. The best part is, you don't have to stress about picking individual stocks or bonds, which can be like searching for the perfect puzzle piece. Mutual funds provide a simple and convenient way to grow your money while reducing the chances of major losses in your financial journey. Understanding risk. One key aspect of investing is understanding risk. It's like learning about the road conditions before a long journey. All investments involve some level of risk, but the type of risk varies depending on what you invest in. Stocks, for instance, can be more volatile and may experience significant price swings, like a roller coaster. Bonds are generally less risky but offer lower returns, making them a bit like a calm and predictable river. Real estate can be impacted by property market fluctuations, which is a bit like your house's value changing with the seasons. And mutual funds are subject to the performance of the things inside them, similar to relying on the performance of a team in a game. So while it might feel a bit like a puzzle at times, understanding these risks is vital for making informed investment choices and steering your financial journey with care and confidence. The importance of diversification. To manage risk effectively, diversification is crucial. It's like having a variety of tools in your toolbox. Diversification means spreading your investments across different types, such as stocks, bonds, and real estate. Think of it as having different ingredients in your cooking. When you have a diversified portfolio, it can help you handle the market's ups and downs more smoothly, a bit like being prepared for different types of weather. So, although it might sound like a complicated term, diversification is like building a financial safety net, making sure your investments are safer and steadier on your path to financial success. Investment timeline. Your investment timeline is like setting the schedule for a journey. It's an important piece of the puzzle because different goals have different timeframes. If you're saving up for a short-term goal, like getting a new car, it's wise to choose safer investments that won't change too much in value, a bit like taking a well-trodden path. On the other hand, for long-term goals, like planning for your retirement, you can be more adventurous and focus on investments with the potential for higher growth, like taking a detour to explore new places. It's a bit like knowing when you need to speed up and when to take it slow on your journey to reach your financial destinations. Investment strategies. Navigating the world of investments is like choosing the best tool for the job. There are different strategies to consider, like buy and hold value investing, finding undervalued assets, or growth investing. Just like picking the right tool depends on the task at hand, choosing the best investment strategy depends on your specific financial goals, how much risk you're comfortable with, and how long you plan to invest. It's a bit like customizing your approach, so it suits your unique financial journey. While it might feel like a puzzle, finding the right strategy can make a significant difference in achieving your financial dreams. And there you have it, a crash course on the basics of investing. Remember, investing is a long-term game. It's not about making a quick buck. It's about building wealth over time. So whether you're starting small or have a substantial portfolio, continuous learning is key. Be sure to do your research. Consider seeking advice from financial professionals. And most importantly, stay patient and disciplined in your investment journey. If you found this video informative, don't forget to give it a thumbs up and subscribe for more financial tips and insights. And as always, thanks for joining us today. Happy investing, and we'll see you in the next video.